Hey guys, this is Andrew Lee here, your health insurance guy, and today's topic is going to be subsidies. Now, I've been getting a lot of questions on how subsidies work, and I can break all that down for you. So, subsidies basically are premium tax credits that you get from the government based off of your income, your household size, your age, your location. Of course, income is going to be a factor. The biggest factor is going to be the household income, right? If you have a household of more than one people, you're going to factor in everybody that is on the taxes that are making money. And also, if you're filing single, then the household is just you, and technically you're head of household. Now, premium tax credits. So subsidies are also known as premium tax credits, and these subsidies aim to make your health insurance premiums more affordable, right? Especially if you're in a certain income bracket, then this is going to be a game changer, right? It's going to be a matter of will I have health insurance or not. So the way that they present subsidies, they're going to be provided, in a form of premium tax credits. So that's already going to be applied to your coverage if you go through the marketplace or through any, subsidized tool or enrollment platform. And what they do is they're going to lower the amount of money that you pay based off of those qualifications that I just went over. So you do have to pay your monthly premium, but it's going to be again subsidized, so it's not going to be the full rate like you're going to be paying out of pocket to the carriers. Now, again, this is income based eligibility, not health like the old days. Ever since the Affordable Care Act came in, this is not going to be based off of health as to how much of a subsidy you get. Again, it's mostly based off of income, right? So the amount of premium subsidies that you receive is going to be based off of your annual projected income. Andrew, how do I predict the future? I don't know how much money I'm going to make this year. I don't know how much money I'm going to make this year, right? I don't know the exact amount. I don't know to the cent how much I'm going to make this year as well. I'm not a fortune teller, right? So what you want to do is do your best job of either looking back at previous work history and how much you've filed on your taxes. If you just wanted to get sort of a gauge on how much you wanted to project for the year, if you're at that same job, let's say if you've transitioned from another job and you're getting paid less at this next one and you're not getting employer coverage offered, then of course subsidies are going to be given to you based off of that new income. So if you just change job, your income lowered, then you might want to double check if you're eligible for subsidies. I have a lot of people that always tell me, "Hey, I don't qualify for this subsidy or this Obamacare," and then they double check and they do, right? So again, I don't like to leave any money on the table. That money is up for grabs if you qualify for it. So if you're deserving of it, why not take advantage of it, right? There's certain scenarios where people won't want to get a subsidy based off of, I think I'm going to make too much this year. I think I owed back from previous years, and I just don't want to go down that rabbit hole again. And I don't want you guys to go through that rabbit hole because not, you can work subsidies and not owe every year, right? You can still receive subsidies and not owe every year. It's the common misconception that if I get a government assistance, then I'm going to have to owe back. And that's just generally not the case if you do it correctly. Of course, have an agent advise you through this. But again, I get this time and time again. So again, with subsidies, generally uh, you're going to get lower premiums, but you also get lower copays for each respective subsidized plans that are out there depending on which income bracket that you're in. So not only does it affect your premium, but it affects your subsidies. Now, if you for any reason made more money than you put on the application, right? Life happens, you forgot to update that with me, for example, if I'm your agent, then what'll happen is you'll end up owing that back on your taxes. So for we're in the year 2024 right now. If right now you project, let's say for example, 30,000, you're a household of one, and you got X amount of subsidies for that. But in reality, when you filed your taxes next year for 2025, for 2024, and you saw that you got, you know, you got penalized, or you got money taken out because you owed back subsidies, is because you did not update that income. So I know, again, it's hard to sort of predict the future and know how much you're going to make, and of course there's a lot of moving parts with your life, that this is going to be sort of an afterthought, but it is very important to update in order for you to not owe back later on. So please let an agent like myself know, so we can update this for you constantly. You can always do an attestation form. If your income changes, we definitely want to report that, so we're not in a situation where we're owing back. Now, vice versa, let's say if you are at 30,000 and you actually made 25,000, guess what? You're actually going to get that money back either in premium tax credits, so additional tax credits your way, or they're just going to give that money back to you from the IRS, right? So now the IRS owes you. So it's not like, you're owing an additional penalty and you're getting penalized because you didn't calculate your income correctly, because you didn't know how much exactly you're making at the time. So that's how it sort of justifies itself. That's how it regulates itself, right? If you put more, or sorry, if you made more than you put down on your application, guess what? You're owing back. It is what it is. If you made less than what you put on your application, they owe you back. So just wanted to give you guys some peace of mind on how that works. And again, in certain states like California, there is still going to be a tax penalty outside of subsidies, a tax penalty for not having coverage. So in California, it's going to be 900 per individual, about 450 per children on the household, on the taxes. So, you know, just make sure that we're cognizant of that if you are in a state that still does have a tax penalty for not having health insurance. The overall ACA, overall Obamacare, has abolished that, federally, right? It's just state-based exchanges that can have their own respective penalties. So sometimes there are penalty exemptions, you know, if you have financial hardships, if you had, a certain life event, or eligibility for other coverage. Of course, you'll have, penalty exceptions, but for the most part, that is how subsidies work. If you put a certain amount on your income, on your profile, and you made more than that, then you owe back, right? The difference of subsidies per month that you received, right? So let's say you made 100,000, but you put 30 on your application. Whatever the amount that was supposed to be at, 100,000, that amount that they gave you for 30,000, they're gonna give, you're gonna owe that back. That's just the difference of subsidies that you owe back, for those respective months that you've had coverage. So hopefully that made sense. Again, if you guys want me to go deeper into this topic, I will, but I just wanted to break this down for you. Hopefully this did help, and I'll see you at the next one. Don't forget to subscribe, and please like and comment. Thank you.